hard to pinpoint exactly the causes, but we were long overdue for a spike in volatility. So vol's gone up, market's gone down. Not necessarily a buying opportunity, but we are overweight risky assets and equities at the moment.
Not necessarily a buying opportunity, you say. So at what point should investors be looking at the levels and making decisions about whether they should be recommitting capital to stocks, for example, or maybe even bonds?
Yeah, well, we are already overweight equities, but I think we'll have to see how the earnings numbers look in the third quarter, and particularly the forward-looking market commentary. So we're overweight because we like the growth story, the earnings story, but if there are any pause in that story or concern from management from a forward-looking perspective, then I think we'd have to reevaluate that.
The causes are obscure, as we know. You know, every investor will take a decision based on their own needs. But clearly there's been a focus on rising dollar funding costs. Is it still your expectation that Jay Powell will continue with the dot plot plan and we will see a fourth quarter interest rate hike?
I think he will. I think he'll be data-driven, as the Fed has been traditionally, and I think the data point to a normalization that's going to continue. I think he shouldn't be shaken by the stock market. There are obviously other factors at play, including the protectionism, which I think is a worry for many investors, and particularly in this part of the world in Asia, a great concern for businesses.
The issue as to whether if you do decide to go back and you do like the earnings, the issue is whether you buy growth or whether you buy value, believing that we are late in the cycle. How do you view it at State Street?
Well, value is hard to find, and I think if you're a value investor, you don't see much in the US from a bottom-up perspective. But we are long-term believers in the value story, and that elastic's got stretched a long way. So the value of value is at an extreme, and it's underperformed this year. So I'd be inclined to look for value in materials, in banks in Europe. Globally, you can find cheap stocks that have a good sustainable story.
Emerging has just seemed to get cheaper and cheaper through the last few months here. Europe as well doesn't seem to be exciting investors. I hear what you say about fishing in Europe. What about emerging markets?
So you've got two cheap things, Europe and emerging markets. The currencies are 10% cheap. The local currency bonds are offering 3% real yields. That is unprecedented, or nearly unprecedented, but we need a catalyst. I think the catalyst needs to be after the midterm elections, when you might see deals done on trade, and that will reduce the risk premium that we're seeing on emerging. So at the moment we're underweight, but if you ask me where we'll be in 3 or 6 months, I would think we'll be participating in that value opportunity.
And is the US market still going to be the lodestar for risk appetite? I know a lot of people fixate on the idea of decoupling, but quite frankly, that trade idea hasn't worked through the last few days.
No, and short term it hasn't worked at all. I think there's a little bit of a safe haven characteristic of US equities, but it certainly hasn't been evident the last few days. I think the story's about growth, and there is still a differential in underlying earnings growth, even forgetting tax changes, for US versus the rest of the world. And as long as that persists, I think US equities will be attractive.
The trade story is square and centre here in Bali. It's the only thing that people really seem to be very fixated on. Do you have in your mind's eye a sense of when this is going to get resolved? I know Steve Mnuchin, the Treasury Secretary, met with the Chinese Central Bank governor here. Is it your sense that the mood music is improving, or is it too hard to tell?
I think it's hard to see that things will get done before the midterm elections. There'll be a sense that there needs to be a toughening or a tough stance. After the midterms, then the president needs to think about getting re-elected, and maybe deals will be done shortly afterwards. And I think certainly it's in China's interest to arrive at an accord with the US. And if you look at Canada and Mexico, in the end those deals were not too damaging for either Canada or Mexico.
Where does the bond market or the commodity market fit into investors' portfolios right now?
We see a lot of demand for long duration assets. We see still a little bit of spread chasing, or certainly less than there used to be. So we've got a little bit of a barbell with US fixed income, where we're long of long duration, we're long of cash, because we think real yields are quite close to the peak. Break-evens may still widen a little bit because we've got cyclical forces from an inflationary perspective, but real yields may be quite close to the peak.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.